Hey everyone, welcome to Finance Plus Investment. Today, we're diving into a topic that's crucial for anyone looking to make the most out of their hard-earned money. Now you work hard for your money, so let's put it to work even harder. It's not just about saving, it's about making smart investments that can grow your wealth. In this video, we're diving deep into the best short-term investments to maximize your returns in 2025. We'll cover everything you need to know to make informed decisions. Because let's face it, parking your hard-earned cash in a regular savings account that barely keeps up with inflation just doesn't cut it. You deserve better options that can offer higher returns. We'll be exploring a range of options from high-yield savings accounts to treasury bills, and even some lesser-known but highly effective investment vehicles, breaking down their pros and cons, so you can weigh the benefits and risks of each option, and most importantly, how you can use them to achieve your financial goals. Whether you're a seasoned investor or just starting out, this guide will have something for you. Whether you're saving for a down payment, a dream vacation, or any other significant milestone, the right investments can make all the difference. Or just want to grow your emergency fund, having a solid investment strategy is key to financial security. There's something here for everyone. No matter your financial situation or goals, you'll find valuable insights to help you on your journey. So, grab your notebooks and let's get started. Make sure to jot down any questions you have, and we'll address them in future videos. Stay tuned to learn how to keep your money safe while earning those sweet, sweet returns. Your financial future is just a smart investment away. First up, let's talk about high-yield savings accounts. These accounts are designed to give your savings a significant boost. Now, these aren't your grandma's savings accounts. They are modern, efficient, and tailored to meet the needs of today's savvy savers. We're talking about accounts that offer significantly higher interest rates compared to traditional savings accounts. Imagine earning more on the money you already have. Think about it. Why settle for a measly 0.01% interest when you can find accounts offering 4% or even 5% or more? It's like giving your money a job to do. That's a huge difference, especially when you let that compound interest work its magic over time. The longer you save, the more you earn. Plus, high-yield savings accounts are FDIC insured just like your regular savings accounts, meaning your money is safe and sound even if the bank goes belly up. Your peace of mind is guaranteed, and the best part, you have easy access to your funds whenever you need them. No more waiting or jumping through hoops to get your money, so you get the best of both worlds, safety and growth. It's a win-win situation for anyone looking to make the most out of their savings. Next, we have cash management accounts, or CMAs for short. These are like the Swiss Army knives of banking, offering a ton of flexibility and features. You get check writing privileges, debit cards, and sometimes even ATM fee reimbursements. But here's the kicker. CMAs also offer competitive interest rates, often even higher than traditional savings accounts. So, you're not sacrificing growth for convenience. Plus, many CMAs are offered by online banks, which tend to have lower overhead costs. This means they can pass on those savings to you in the form of higher interest rates and lower fees. It's a win-win situation. Now let's talk about money market accounts, or MMAs. These are similar to savings accounts but typically come with higher interest rates. And just like high-yield savings accounts, they're FDIC insured, so you can sleep soundly knowing your money is protected. MMAs also offer a good balance of liquidity and growth. You can usually access your funds easily, though there might be some restrictions on withdrawals compared to a regular savings account. But hey, that's a small price to pay for the potential to earn a higher return on your money. Just remember, interest rates on MMAs can fluctuate, so it's essential to shop around and compare rates from different financial institutions to find the best deal. Chapter 4. Short-term corporate bond funds. Diversification for steady income. Now, if you're looking for a bit more potential for growth, but still want to keep things relatively safe, short-term corporate bond funds might be right up your alley. These funds are designed to offer a balance between risk and reward, making them an attractive option for many investors. These funds invest in bonds issued by corporations, which are essentially loans that you're giving to these companies. In return, the companies pay you interest, which can be a reliable source of income. Now, don't let the word bond scare you off. Bonds can be a stable and predictable investment, especially when they are short-term. They are less volatile compared to stocks, which can be a relief for conservative investors. Short-term corporate bonds are generally considered less risky than their longer-term counterparts because you're not locking your money up for as long. This means you have more flexibility and access to your funds if you need them. Plus, these funds offer diversification, meaning your money is spread across multiple bonds and different companies, reducing your overall risk. Diversification is a key strategy in investing as it helps to mitigate potential losses. And here's the best part. Corporate bond funds typically pay out interest regularly, providing you with a steady stream of income. This can be particularly beneficial for those who rely on their investments for regular cash flow. It's like getting paid just for holding on to your investment. So if you're looking for a way to grow your money while keeping risks in check, short-term corporate bond funds could be a smart addition to your portfolio. Chapter 5. Short-term U.S. government bond funds, backed by the full faith and credit. For those who prioritize safety above all else, short-term U.S. government bond funds are about as close as you can get to a risk-free investment. These funds invest in bonds issued by the U.S. government, which are backed by the full faith and credit of the United States. Now, I'm not saying the U.S. government is perfect, but they haven't defaulted on their debt yet. So, your investment is about as safe as it gets. While the returns on government bonds might be lower than some riskier investments, they provide a reliable stream of interest income and are an excellent option for preserving capital, especially during times of economic uncertainty. Chapter 6. Money Market Mutual Funds, Safety and Yield in One Package. Now you might be thinking, wait a minute, didn't you already talk about money market accounts? And you'd be right, but here's the thing. Money market mutual funds are a bit different from money market accounts. While both offer safety and liquidity, money market mutual funds typically invest in a wider range of short-term debt securities, like treasury bills and commercial paper. This can potentially lead to slightly higher yields compared to money market accounts. However, it's important to note that money market mutual funds are not FDIC insured. That being said, they are considered very low risk, and many investors use them as a cash management tool. Chapter 7. No penalty CDs, your money grows without the restrictions. Let's talk about no penalty certificates of deposit or CDs. Now, traditional CDs typically lock your money up for a fixed period, and if you need to withdraw funds before the maturity date, you'll get hit with a hefty penalty. But no penalty CDs offer the best of both worlds. You get the higher interest rates of a traditional CD, but with the flexibility to withdraw your money without penalty, usually after a short holding period. This makes them a great option for short-term savings goals, like a down payment on a house or a new car, where you want to earn a decent return, but might need to access your funds before a traditional CD matures. Chapter 8. Treasuries, short-term investments backed by the U.S. government. Now for our final short-term investment option, let's talk about Treasury bills, or T-bills for short. These are short-term debt securities issued by the U.S. Treasury Department, and they're considered one of the safest investments in the world. T-bills have maturities ranging from a few days to 52 weeks, making them ideal for parking your cash for the short term. And since they're backed by the U.S. government, you can be confident that you'll receive your principal back, along with interest, when the bill matures. Plus, T-bills are highly liquid, meaning you can easily buy and sell them in the secondary market if you need to access your funds before maturity. Chapter 9. Brokerage cash sweeps, putting your idle cash to work. Finally, let's talk about brokerage cash sweeps. Now, if you have a brokerage account, you know that any uninvested cash usually sits in a settlement account, earning next to nothing in interest. That's where brokerage cash sweeps come in. These programs automatically sweep your uninvested cash into a higher-yielding account, like a money market fund or a bank deposit program. This way, your money is always working for you, even when it's just sitting idle in your brokerage account. And the best part? Most brokerage cash sweep programs offer FDIC or SIPC insurance, so your money is protected. Outro wrapping up. Your short-term investment strategy for 2025. So there you have it. 9 powerful short-term investment options to maximize your returns in 2025. Remember, the best choice for you will depend on your individual financial goals, risk tolerance, and time horizon. Don't forget to like this video if you found it helpful, and subscribe to Finance Plus Investment for more financial tips and investment strategies to help you achieve your financial goals. Hit that notification bell so you don't miss out on any future videos. Thanks for watching, and I'll see you in the next one.